What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 26th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to dive into a common misconception that I hear too many times to count in the cryptocurrency market as we revisit back to the previous all-time highs. All the while, it might seem like it's a signal to want to take profits and step away from the market. This is where we're entering to what's known as price discovery. And I want to talk about why this is actually a really bullish thing for price and likely means that we have more room to grow, not only in the sense of price, but also in the data science models. So we're going to go ahead and dive straight into it, guys. Let's not wait any longer. I want to start by taking a look here at Bitcoin and Ethereum and their USD pairs, because this will set the context for what we're talking about today. Now, as we talked about for the last couple of months, we dove into the fact that we had been setting in these higher lows, these higher highs, in this case, a sign of a trend reversal that we always like to look for here when it comes to the markets. And as time progressed, we were able to go through key levels of resistance and previous support and turn previous levels of resistance into new support and turn previous levels of support, in this case for price, that we'd broken through, right? We broke through that potential resistance. We've continued to climb higher here, and now just the other day, back on October 20th, we were able to come up and set in new all-time highs with a quick fade here in price, right? Coming down from around 67,000 down towards around 59,000. And that got a lot of people spooked about the market. It got a lot of people thinking, oh my gosh, it's a double top in the market. The market's going to sell off in this case. And, maybe I'm overextending things or too over priced at the moment. And the same went here for Ethereum. Right, back here, for example, we're on the weekly chart now. I'll go ahead and take it here to the daily so it's a little more clear. We set in right around the same point of price action from back here May 12th, here on October 20th. And then we had a little bit of a pullback here from around a little under 4,400 down to 3,900. And everyone is screaming, oh my gosh, it's a double top, price is overextended. And outside of that as well, we've reached the all-time highs. This must mean it's a time to sell, right? Because we're back at the all-time highs. That must mean the market's overextended. Well, that's actually not the case. What this is a sign of is what everyone wants to see in markets, which is that we revisit back to what people thought was a bubble, a euphoric peak, but in reality was the mid-cycle top before a correction where price would then be recovered and then enter into where it was beforehand, before the correction, which is price discovery. And it's a very fancy term in this case for when price breaks past the previous all-time high and continues climbing higher. For at that point, there is no degree of resistance in this matter, right? I'm working on not saying in this case, so hopefully you guys have noticed. I'm going to try to be better about that. But overall, this is where we expect price to continue climbing higher because there are no points of previous resistance. There's nothing to really block Bitcoin or Ethereum from continuing to climb. Now, eventually, there will be a top in this case. I'm not saying that once you clear through the previous all-time highs, you'll just keep climbing, right? But you really have no gauge in this case to know whether or not you're going to face resistance at this level or possibly see support at this level, right? There's nothing to work with per se. But this is why it's also important as well to always keep open to the idea of tools like dollar cost averaging. We did a recent webinar on the DigiFox YouTube channel. We actually had it live. If you guys want to join those webinars when they happen, you guys are welcome to check out the DigiFox Twitter at digifox_finance. Give us a follow on there if you're interested. But we did this really good length, hour-long webinar in this case where we dove into dollar cost averaging and how generally, because you're buying at the highs, you're buying on the discounts. What's so nice is you mitigate all the concerns around volatility. You're averaging on the higher ends, you're averaging on the lower ends, you're averaging as you're moving back up again. What's so nice is that generally, through all these volatile swings, you're generally moving down the middle here. You're still moving up and making solid returns over time. And that's the really cool beauty about dollar cost averaging, right? To not worry about it, because once you enter that price discovery mode, anything throughout this period of time. Whereas everyone was trying to trade on leverage, they were freaking out about, the May crash, this is it. Or when, Elon and Tesla are promoting Bitcoin and starting to accept it as payment, people are buying into all the rage and FOMO there. And all that noise, Bitcoin still stands towards its previous all-time highs, roughly speaking, from where it is now. And it's looking like it's set to continue climbing higher. The same here for Ethereum. I got to tell you guys, if you look at history, Take you to the auto chart here, you can see that there are many times where price had faced a consistent resistance range like it has right now, had higher lows, right? Back here as well, and the mid-cycle portion back in July to November 2017, right before Ethereum really kicked off the altcoin cycle, right? Really, really consistent patterns here that we've seen back in the past. And I like seeing these kind of price patterns. I like history repeating to a large degree. So this is the kind of stuff that I'm always interested in. And I also wanted to give another respected shout out here. If you guys want some extra content to dive into, some long format content, I did an interview and I'm going to leave it linked down below alongside the webinar video down below in a pinned comment. This was an interview I did with Jay from Crypto Anxiety. It was a really solid interview. I hadn't done an interview in a while, and it was a really nice back and forth conversation. Jay's a great guy. So I recommend you guys go ahead and check that out, because we did talk about where we think Bitcoin's going, our price estimations, etc. And as we consider these kind of larger price estimates, as we enter into price discovery mode, we can start to really see the framework build out for prices to reach the levels we've been talking about. Going over not only just a conservative target of 100K, but really going towards 150K, 200K over a longer term time frame than what most people are probably expecting, right? So for example, how can I really back up this claim? Well, one thing I wanted to show you guys, this is one of our custom data science models we have exclusively within the Dash report. It is the Bitcoin Flow Index, or BF Index. And what's really interesting about it is that it showcases that we are still nowhere near on the data science models. Like, for example, when this general data science model is on a higher score, when we enter into double-digit territory or upper double-digit territory towards around 17 points, this is usually a telltale sign that we are near a cycle top to some degree, right? Well, what's really interesting is that we haven't even gotten back to the May levels here for our overall model. We are still back at where we were, roughly speaking, back in December of 2020, or here during the mid part of the May correction, right? We've started to recover a decent degree, definitely from this lower point here, but we're nowhere near the previous May levels, nor where we should start to be concerned of a cycle top, right? So this is really interesting stuff. And not just in our custom data science models is this showing, but we've also as well got a lot of the other data science models you can just access online in this case, right? Look into Bitcoin, right? The MVRV Z-score, still nowhere near the May highs here in this case of market cap minus realized cap divided by the standard deviation of market capitalization, right? We generally see as this moves up higher into the red zone, that's a telltale sign that the market cycle top is coming, right? And we got close to it back here in May, but we haven't seen it just yet in regards to the reflection of the MVRV Z-score. And this will start to spike up much higher as we enter into price discovery, right? The divergence here between market cap and realized cap. Let's take a look at the Puel multiple, right? We had a dip down here in the green zone back here in June. It was a perfect time to average in, right? When everyone was selling, in this case, the data science models were showcasing we were at a discount, and look at us, we've rebounded from 0.449 all the way up to 1.89, and we're still not as high as the May levels. So what's my point in all this? I want to kind of hit on why I'm focusing on the data science models. Isn't it bearish in this case that we haven't gotten up to those previous relative highs? No, it's actually not. And in fact, it's commonplace when price is able to come back to the previous highs, but the data science models are still showcasing a lot of room for growth. This is actually a very bullish thing. And the reason that this happens, depending on what data science model you're looking at, it can vary. But overall, the major reason for this is because they measure a variety of variables outside of price that signal momentum. And just like how, for example, the Puel multiple in general, like most data science models, has actually been declining over time. It's setting in these lower highs, right? Considering that, you would expect, the price is going up exponentially in this time. Sure, we're looking at the logarithmic chart, but it's been really, really high. The reason why is all these data science models are measuring things that aren't purely reflective of price. And if they are reflective of price, they adapt in this case over time, utilizing things like moving averages, for example, the stock to flow. There's all types of different models that are accustomed in this case for a generally increasing price over time. Right? So it's completely fine if the data science models aren't back up to those March, April, May levels. That's actually a given in this case. And it's overall a beneficial thing for price to have further room for price discovery, aka all-time highs, newer all-time highs, right? So again, as we're going through and starting to plan the extension here from where we're at right now, a little bit under that 65K all-time high, going towards 150K, 200K in the cycle, it's really a matter of just simply either dollar cost averaging in, building those positions here today, and waiting it out, letting the cycle do its thing. Now, for those of you out there, whether you are a small or large trader or investor, doesn't matter where you come from. If you're looking to streamline this process and make it not only incredibly simple to get the allocations and maybe get some decent consulting on how to allocate yourself to the market and get started on things, one place I would recommend you turn to is today's video sponsor, which is Caleb & Brown. They're one of our long-term partners here on the channel that focuses in over-the-counter trading or OTC trading. And this allows you, rather than going to a centralized exchange like Coinbase or Kraken, where you have to go through and set up an account, Caleb & Brown can help you avoid a lot of the common mistakes that can come from engaging in the crypto market, from protecting you against major market spreads if you're trying to make large-scale purchases, to helping you get the consulting you need to get started. And probably the biggest thing that helps a lot of people, depending on where you're based, is the expedition to being able to make your purchase as soon as possible. One of the best things about OTC desks that people really don't consider versus a traditional spot exchange is the onboarding time in this case. Caleb & Brown, as well as other OTC desks, will be much more proactive in this case on getting you onboarded versus an exchange. And they have real people in this case, real phone support that you can talk to if you have any questions about your trades, the execution, the state of the market. So I highly recommend you guys take a look into Caleb & Brown. We've got a link down below in the description if you guys want to support the channel. It's always appreciated. But Caleb & Brown has been a long-term partner. We've had some great interviews with them. And I'll go ahead and actually leave an interview link down below as the third video within the pinned comment with an interview of Jackson and I, one of the members over at Caleb & Brown. He's a great guy. We've had some really solid conversations about the state of the market. So if you want to get a feel for the expertise that they really bring, I think that's a great place to get started as well if you're not going to sign up right away. So that being said, everyone, that's going to be it for today's video. If you like this video, please consider dropping a like, consider subscribing as always. And until the next one, I'll see you all in the next video. Take care, everyone.